Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of March the 20th, 2017. Now to get started this week we're going to begin where we always do with that all-important US dollar index. Now our key vantage point level 100.98, where you can see that we have a trend line break here. But again, this is largely caused by an indecisive Fed. So when we look at this right now, the dollar index is stalled at the 100 level. In my respectful opinion, it was a buy the rumor, sell the fact. But at this particular stage, I am not convinced that money is not going to go right back into the US dollar sooner rather than later. Now, our indicators start moving into oversold territory. Predicted MACD has not yet crossed the trigger, and our predicted RSI, while did show a great move here with the triple EMA cross, we are starting to flatten out. So we'll look for some kind of recovery to some degree on the US dollar index, but right now we really have to wait and see how the market digests what the Fed actually stated. Now, when we go into Euro US this week, again, we're moving higher, but once again, I really don't know if we're going to clear this all-important resistance level here that's going to come in right around between 108 and 108.05. Now, our indicators from VantagePoint are not overbought just yet. Our predicted MACD looks like we could extend a little bit higher, but again, the predicted RSI is turning the wrong way. It is not continuing to move higher. So the dollar basically benefiting from the Fed statement. As you can see that if we take this bar out from the Fed bar, which is basically the Euro US has done nothing since. We've made slightly new highs each day, but our closing price is still right back to the end of that breakout point. So my optimism on further Euro strength remains heavily guarded at this time. Our indicators from VantagePoint are very, very mixed, but again, watch this area between 108 and 108.50 as we could have a very good selling opportunity. Now, US Swiss franc, this mirrors the dollar index. We can see it too starting to stall out at the 99.50 area. We've got that trend line break, but once again, we can see this long bar down after the Fed. If we take this bar out, US Swiss franc has advanced slightly, but only by about 45 to 50 pips from this breakout point. So not exactly a huge move here, guys. And our shorter term indicators, from VantagePoint are already starting to turn back to the upside. We see our short-term predicted difference crossing over our long-term back to the upside. So once again, it warns that this dollar weakness could only be temporary. Now, if we look at the British pound this week, again, last week I identified a very critical level for everybody at 121.20 and suggested we have a problem down here. Last year, the majority of market analysts and pundits are saying the pound dollar was going to sell off. It did the exact opposite. So this is what we have to look at. We have to study price, and the fact is, we ran out of sellers down here, guys. Bottom line. So we've got a fresh triple EMA cross. Our key vantage point level comes in at 123.01. We are showing signs of some further strength in the British pound, but the British pound is an uphill battle to face going into Brexit, all of these different things. And once again, I'm not convinced that we're going to see any real major upside. Now, our current trend line, I'll draw this in so everybody can see, that's going to come in about 124.50. So only a break of 124.50 will this rally extend. And once again, I have to point out this great big bar to the upside after the Fed. Without the Fed and the comments made by the Fed, we wouldn't see these gains. So be careful of a potential bull trap, up at these levels. But watch the 123 area very, very closely. That is the line in the sand for next week. Now, as we move into dollar yen, now the dollar yen is sold off right across this trend line here at 115.50. We have a very narrow channel, believe it or not, between 115.50 and the 111.75 area. The market moving back and forth between here for basically the better part of 2017. We have another triple EMA cross from VantagePoint back to the downside. So our potential target here is the 111.70 area, but be very cautious around this area because we remain in this channel, so everybody can see this. Very important that we understand that. So there is no trending move per se here just yet. The key vantage point level will help us determine that, however, 113.80. We're closing below that at 112.66. So as long as we're below 113.80, shorts do carry a slight edge down to that 111.70 area. Now, our indicators from VantagePoint are warning that we're going to see probably at least one more push to the downside, but our predicted MACD is stalled right on the zero line. So we need that pushing below the zero line. The predicted RSI is suggesting a little bit more downside, potentially more than just a little bit. But again, be very, very cautious next week around that 111.70 area. Now, with the Canadian dollar here, we've pushed up all the way to 135.20. I talked about this in last week's Forex Weekly Outlook, that we need to retake this level very quickly. We couldn't, and down we've come. Now, we've got very strong trend line support coming in about 131.80. Longs are favored off of this area. Our critical vantage point level, 133.41. We've closed just above that at 133.47, leaning towards a slight bullish tone to this pair still, even after this sell-off. So we'll be watching this area around 133.41 to begin the week. If we can retake and close above 133.41, US-Canada should continue to move higher the rest of the week, but if we close below that, then we're probably heading down into the 131.50 area, which at that time we can reassess. Now, when we look at the Aussie and the New Zealand pairs next week, these two are very tricky pairs, but you can see that this massive bar that we've had after the Fed is basically money pouring out of that Aussie US short. If we take this bar and we just remove this bar here altogether, has Aussie really made any gains? Not really here. So we've made it, all of these gains have come on the back of the Fed announcement within a couple of hours after the announcement, and we have stalled ever since. We are up against a massive trend line in the 77.50 area and a swing high that goes up into just below the 78 level. So at this particular time, shorts carry a slight edge. Only a sustained break of the 78 level, where we break free and clear of these swing highs, do we see further gains on this particular pair. Now, our indicators from VantagePoint are suggesting we potentially do have a little bit more upside, but watch for a short between 77 and 78. Now, the critical VantagePoint 18-day coming in at 76.18. We're closing bullish at 77.02. So again, it does suggest we're going up a little bit higher, but I can't help but point this area out right here. If I just zoom in on this for a second so everybody can see this, very important. I'm on the 6-month time frame where I've drawn my trend lines from, but if we look at it closer, we have absolutely done nothing since the Fed. So we can talk about how bullish it is, how bearish it is. We want to study price action, look at the indicators. We have a triple EMA cross from VantagePoint, but again, it's picking up on that big move from Wednesday. Can we get moving on this next week? Possibly, but what do we need? The key intermarket correlation here, guys, is gold. If gold moves higher, Aussie US moves higher. That's the bottom line here. Very important that you're watching gold if you're trading the Aussie currency or the New Zealand currency. Now, the New Zealand's finding heavy support right around the yearly opening price, just above the 69 level, but we need to get going. If we look at the New Zealand pair, you can see that we're trapped up against this VantagePoint 18-day predicted moving average at 70.23. We've closed at 70.17. We are not able to breach this area. Even after this big bar up from the Fed, it still did not clear that critical VantagePoint 18-day predicted moving average. Now, our indicators are warming up to the idea of a potential long trade on New Zealand. My concern here is that we have come up and touched the 60 line on the predicted RSI, and we failed. So right now, we're trapped between the 40 and the 60 level. A break of this area will see us go higher or lower, but we need to break on this RSI to get this moving. But right now, our main focus is right around this 70.23 area. Can we close above this area Monday and Tuesday of next week? If we do, the New Zealand will run, guys. Probably will run all the way up to 71, maybe even higher. But if we can't clear this level by, say, Tuesday of 70.23 and close firmly above it, then this pair, much like Aussie US, would head lower. So these are the critical levels we want to watch going into next week's trade.